Hey traders, this is Shegun Chat 247. I train traders how to trade in harmony with the market. So today I want to explain some things. This is education stuff about the trend and the waves. Okay, people often overlook the significance of the basic things in trading, and we get attracted to the fancy stuff, the moving average, the support and resistance, the imbalance, and all those unending trading concepts. But actually, if you can understand this simple basic stuff I'm going to share with you in the next 10, I don't know how long this will take, then your trading will immediately improve. Okay, and just follow me. So we say price will move in trends. Okay, that's the first principle, and the trends will move in waves. So there are two types of waves. The first one is the first one, which dictates the trend, is what we call the impulsive wave, or I like to call it the primary trend. That's the wave that we count. Okay, primary trend. That is the one that dictates. So basically, it dictates the trend direction. So, and we have the second one, which is the corrective waves, or we call this secondary trend. Okay, and that is the pullback that we all know that we all want to take, but it's very difficult to do. Okay, the pullback that gives us a structure. Okay, pullback or correction. Many people use different terms for this phase of the market. The idea is, what are the characteristics? Okay, so now I'm drilling into what I want to do. Am I typing right? Characteristics, okay, of these two waves, of impulsive wave and corrective waves. Okay, very important to understand this. Simple and basic stuff I'm going to show you today is an impulsive wave. We have five waves. Okay, five waves is impulse, then three waves is corrective. When the trend gets to a level, so I'm going to use this paint now actually to demonstrate something to you. Okay, so we're talking about waves, and we said the price will move in trends and the trend will move in waves. So we have, if we have an uptrend series of higher highs and higher lows, so we have a higher high, second higher low, then a higher high. That is a complete trend. One, two, three, four, five. So we can label it like I've just said now. What can I use? Let's use this one. This will be your oops, one. This will be, oops, what am I using? Come on. You can see this is not rehearsed. So I'm trying to find the right color to use. Okay. So yes, that's what I need. So this is your two. That took me a while to get. Three, four, and five. So when you see a trend that gives you one, two, three, four, five, that is the direction of the trend. That is the impulsive wave. That is the primary trend. Okay. Obviously, there are more things you have to study to be able to identify what happened here during the secondary trend. because here in this wave you see 0, 1, 2, 3. You see 0, 1, 2, 3, which is the corrective waves. Okay, inside the correction gives us information whether you should still be buying or you should not buy this uptrend. The information is derived during this corrective wave phase. And when I teach trading, I say to my students, I always say to them, the secondary trend, which is also known as the corrective wave, is actually the most important phase of the market when the market is trending. Okay, so let's draw the downtrend. So we have 0 to 1, followed by 1 to 2, 2 to 3. Now we have one higher low, one lower low. Then we have a lower high, sorry. Now we have two lower highs, 4 to 5. Then we can label it the same way. This will be 1, this will be 2, this will be your 3, this will be your 4, and this is the 5, which completes the trend. So this is a downtrend, primary trend. And inside here, you expect 3 waves, secondary trend, or correction, or pullback, whatever you want to call it. It means the same thing. Okay, that is a downtrend. This is an uptrend. And the same thing here, this secondary trend or the pullback, it is the most important phase of the market. Because if you are not in this trend down and you came in here, you need to observe what happened here. Is the trend going to change? The information is derived from this place. If you are not in this one and you got into this, you decided to trade, you have to wait for this pullback to complete. Therefore, you can correctly interpret the information that the price is going to give you within this pullback, whether you should sell or stand aside and wait for a retreat or a change of trend. That information is derived from here. No indicator will tell you that. No indicator will tell you that. Only the price. And you have to learn how to read the price correctly in order to be able to determine this information. So let's go to the live chart. Enough of the paint stuff. Okay. So what I'm going to do is I want to quickly identify the waves for you. I'm going to use the candles. There's something we call the structural point, the momentum high, momentum low, all those things. For those that have watched some of my videos, you will understand what I'm talking about. I'm not going to say too much about them now. I'm just going to draw them out for you to be able to see it. Okay, so I'll pick the drawing tools. We have a completed wave structure on this swing here. 0, 1, 2, 3, 4, and 5. That is a bullish secondary trend. Okay, primary trend, sorry, I keep mixing it up. So that is a bullish primary trend. So if this information is correct, price should not come below this second structure here or even below the 0. Let me just make it simple. Below the starting point of this trend. So there's an interest in buying. That is why we saw a completed wave structure. There are more subtle things that we can do with this pullback here, like I mentioned to you, but actually let's look at the secondary trend, because price will always give you a discount. The reason we have a secondary trend, a pullback, is because the price is a discounting, or the market itself is a discounting mechanism. When things becomes too high, they will say to you, it's like you going to the market and you want to buy iPhone. If the price is too high, you say no, it's too high, let it come down, then you buy it, unless you are so desperate. And trading, we don't want to be desperate to buy the high. You want to wait, because during that you're waiting, you have information. Price presents information. So We have seen a corrective wave now. I'm going to use ABC. It means the same thing as 0, 1, 2, 3. So we have 0 to 1. There's no pullback in here. So that is a higher momentum low, pullback, C, a B, and C. So we've seen 3 waves completed. Let's use red for that because that's a counter trend of the upside move. Remember, I said in our notes here, price will move in trends and the trends will move in waves. The thing that I didn't say here is these waves can be counted and interpreted. And this is where your job is. In order for you to become a consistently successful trader, you must be able to understand what the price information that you can see on your chart. Okay, price will always give you information. That is why we don't need to pick the top or pick the bottom. Fine, there are some instances that we do that from a lower time frame and we have accurate entry. But sometimes, like the trade I took today, I bought here, the price came down a little bit. We moved the stop loss down just to see what is going to happen. That is okay because I we don't have a crystal ball, okay? But we can, if we continue to interpret the information consistently, we will be able to make consistent profit in trading. So now, what do we have? So we do the same thing. We're looking for the low, and we now have a higher low. In this sequence, is a lower low, but it's a higher lower low. That meant something. Okay. Then I'm looking at this. We have a structure here. This is a structure that's not a momentum high. Now it becomes a momentum high. We haven't seen a 2. So we have 0. 1 is currently going on. Now we are in an uptrend again. The trend is changing. For those that follow, what is it called again? The smart money concept. This will be your change of character. We call that bullish change of character. And all these things you can see, all this thing is now coming out. All the concepts that people trade is now coming out from simple understanding of the price. What am I doing? Bullish change of character. That's the one. Okay. Then this is your break of structure. Okay. Oh, come on. That's your break of structure there. Then we have the change of character down here, which is bearish. That confirms the correction. Okay. And the people that make software, they probably will give you a change of character here and a break of structure here. I believe that is wrong, but it's down to interpretation for everybody, because when you understand the significance of the price movement, you will be able to draw all these things correctly. So now, how is the trend going to resume to the upside? We have to see a break of the last structure, which is this B here. That tells us that now we have a high percentage or a high probability that this uptrend, the people that bought here, they are now interested in again. It doesn't mean the price can still not go down, okay? But as if the price break above here, this now becomes what I normally refer to as a momentum high. The reason we call it momentum high is because that is the price point where the exuberance of these buying people, these people here, this is where their exuberance ended. This is where they say, okay, price is too high now. We need to start taking some profit, and the price started coming down and giving us discount. Okay, so just to recap what I've explained this morning, price will move in trends, the trend will move in waves, and the two types of waves are the corrective in come on the impulsive wave, which is the primary trend. That is the wave that dictates the trend. It will come in 5 waves As long as you can count them correctly, it comes from 1 minute chart, on the 5 minute, on the 1 hour, on the 4 hours, on the daily, on the weekly, on the monthly, and so on. You get the gist of what I'm saying here. Then, if you have an established trend, look for the correction. We have correction inside the waves itself, inside the ongoing trend, and you have a major correction after the end of the trend. It is the same thing. If the trend is going to continue, you will have 3 waves down, and it will not be more than 3 waves. If you have more than 3 waves, that is something else. Okay, then that is an information that you can learn to interpret so that you can utilize. Is actually the most important information you can learn in trading. So this is a quick one, guys, this morning. My name is Shogun Chat 247. I love teaching trading, and I love giving all this simple insight to help traders on their journey of consistency. Okay, if you like what you see, give us a thumbs up. I love to see you guys. Have a comment at the bottom of this video, and let me know what you think, and I'll see you in the next one. God bless.